Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Appreciate you visiting the lab today. Could I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Dan, and good morning, everybody. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades. They are available to all of you at no cost in the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube if you're inclined. There's no cost for this. It's really about the business of trading, how to build a trade plan, how to extract a statistical edge, and actually understand what this business really is. We come into the business with a fantasy, and unfortunately for our fantasies, it's just a dream. Reality is, if you treat this like a business, you're going to understand you're going to have losing trades because every business has overhead and cost of production. You'll also understand that the business model that has been proven to work in the sense of how or what this business is gaming. In other words, the way casinos operate. Now, I remember when I started in trading 46 years ago, I was accused of being a gambler. And I said, no, I am not a gambler. This is not gambling. Well, if you are a gambler, and many of us don't know we are gamblers, that's what you are. But if you sit on the house side of the table, are you still a gambler? Or you are taking risk like any business does, but instead of gambling, you have something called edge. And if you have an edge over time, even though you're going to pay the gambler and that overhead and cost of production, that edge is what derives the net after expenses. Isn't this how a business works? So whether you have a grocery store, a restaurant, or whatever, you still have expenses. Casinos have expenses, but they can afford to give you the cocktails, the ticket to the buffet, and still pay the gamblers. And they're doing pretty good, I think, and historically that's a successful model. So if we can take what we know works, not try to make something up out of our fantasy, and then build a platform or process and only engage when we have that statistical edge that favors us, is it possible that if you followed a plan based on that model that it might give you sustainability? And of course, you have to do the work. Trader Lab can help you with that, and so can the other tools that are available to all of you in the Bookmap server. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get into it, we'll talk. Now, just to remind you, there's 60 PDFs in the Trader Lab you can download. These are structured trades I've shared. And just to give you a caution, these were just thrown together. Many years ago, traders were saying, what are you doing? So I said, well, here's a little of this and a little of that. It's sort of like a trading smorgasbord. It is not plug and play. Anyone who does plug and play, in my opinion, and it's just a personal opinion, not a good idea. Also, the idea at Trader Lab is to help you understand market mechanics. How does the market work? Why does it do what it does? How you might get in alignment with it. And to do that, we use something called auction market theory. It's shopping. So let's not get carried away with the quote complexity. Trading is simple. The issue for us is randomness. So we need to be able to organize the information, and then we need to know when the information and the current behavior or context of the market are in alignment. If we have done the work and isolated these specific behaviors so they are qualified, that's when we can determine if we can derive a statistical edge, and that's the work. And another way we might do that, Bruce has a pilot program. What is it? How do you extract an edge? What kind of tools are available to you in Bookmap that might help you determine if you have an edge? We all have random winners. That's the illusion. Was for me, wasn't it? Oh, look at these winners. Let me make it better. How do we make it better? We curve fit, tweak, tune, get the little screwdriver out. I even went into trading systems to try to create optimizations. Well, I did. What did I do? I curve fitted. What did I continually have to do? I had to re-optimize. What I was trying to do is fix a defective process. I didn't know it was defective because I had winning trades. Are you having winning trades, but you're not sustainable? If that's you, then you do not have an edge. Or if you have an edge, why are you not able to extract it? There might be more to it, right? Traders can have an edge and still not sustain themselves. That is really psychological impediments. And a lot of that has to do with not understanding the business or really having a vetted edge. So you might have an edge somewhere, and you might also have trades that have no edge. You're mixing them. Wouldn't you eliminate the ones that cost you over time in spite of the random winners? Well, maybe Bruce's pilot program can give you a little bump in the right direction, and then you can determine what is your business model. What time frame might you operate in? These are the questions, and you're not going to get them by doing a process that doesn't work and is not sustainable in spite of your random winnings. By the way, last day, get your submission in, hashtag Bookmap Pets, get a photo of that cricket, send it in. When I'm in Costa Rica, I've got ants running over my screen while I'm streaming, and the monkeys are chattering outside the door. I have not gotten a photo of a monkey in front of my screen. In fact, there was a monkey in front of my screen. I wouldn't be there to take the photo. Just drop that photo in and use the hashtag BookmapPets. Put it on X, LinkedIn, or Instagram. How's that? Now, this is the intermediate time frame, if you will. Some of you may think of it as a higher time frame. Let us agree at the moment, this is the all-time high. That is what's called a weak high. That leads us, or me, to suspect. Remember, the word predict is not in here. Suspect. That's going to get taken out eventually. So what do we have? Market goes up to go down. Market goes down to go up. Market goes up to do what? Take the stops out above here, get these shorts out, and then if we squeeze the shorts, what might we do? Go down. Go down to go, we'll see, right? So this is this morning's RTH. I want to show you a couple things. And I'm going to show you how the market works, not what it will do, but where it might do it. This is the beauty of the auction. Now, I don't use any indicators. I found that indicators were actually the problem, not the solution. I'm not saying you can't use them, right? What I'm saying to you is, if you don't understand how the market works, your spaghetti is just going to add randomness into a random environment. If you understand how the market works, you'll be able to identify potential locations where you might see a reaction. And that's what we get out of this. So what is this? Now, this is today, okay? This level, 1425, was the retail price or highest volume. Remember, this is shopping. If you know how to shop, you might already know how to trade. You just haven't put it together. In your store, the time frame is pretty long. The prices don't change much. If the price is too high, you won't pay it, or you'll use an alternative product. And if it goes on sale, you'll throw 4 in the cart. Well, where is on sale? It's right there. Where's the retail price that was developing? Now, I took this early this morning after RTH opened. Anyway, higher time frame. Too high? What do we know here? Maybe too low. Now, I can't say it won't take this out, but what I might say to you is we might have got our shorts and squeezed the weak shorts out here. If the market goes up, it can go down. But what happened here? We went down to go up. We might just sort of fiddle around in here. And we do have a little event going on called the government shutdown. So is anyone going to be taking positions? And it's just, now that is incidental to trading, but it's a backdrop. So let's look. What do we know? Market was short, went up yesterday, took the weak shorts out. What do we know about this day? Market is long in here, market short in there. Market goes up, market goes down. We got stops under here, and we had stops up there. Let's move forward. Now, whoa, what did he do? What was our target yesterday, we had two. We had one at 30, which is the high of the day. Who knew? It was also the ETH, or overnight volume point of control. If you remember yesterday's stream, and if you didn't watch it, come on, watch yesterday's stream. You'll see this trade. And what this was the high of the day. Who knew? And if you were able to get short here, where was our target? The retail price here, low of the day. Who knew, right? Now, this is this morning. I want to show you some ideas. That's what this stream is about, ideas, and really good ideas, I think. This orange line right here from yesterday. Now, this was too high. This is the retail price at the end of the day, or highest volume. Remember, shopping. What do we know about this? Well, out here, 18-ish, and I posted this in Trader Lab, in here is the outside edge of what's called a distribution. So let's look at this thing. Too high. I'm not paying that. Then we do one of these deals. And if we leave it, so that's too high, and we leave it. So we did the, I'm not paying that. Yeah, but it's on sale. But in retail. But if the price becomes too high, we get in the car, we leave the store. Now we're in a new store. We start the rotation over here. Too high, too low. And this is where the high volume is. The new retail price. This is why this is important. This separator is called a low volume node. And what it is when the market broke away from this balance area or auction or consolidation, define it any way you want. And then we started this new thing. But what was too low from the day before yesterday, day before? Here. So what did it do for us? It says too high, retail, too low. This was the target coming down. So it could have been short. Well, what I did in the morning, I went long to there, looking for it to get through. Didn't. Then it was shorts coming down to there. How about that? There was the target. What do we do today? Let's come now to this morning. I know this is too high. This is my RTH open. And I'm showing you the profile so you can kind of see where this structure comes from. If I test here, and now this retail price is too high, where might I go? Let's come back here, Tom. Okay. See it? So, short, potential long, rotational trade. So, today, rotation. Now, let me take you a little further. Let's look where we went. Too high. So, open, short, and I just grabbed this a few minutes before the stream started, and where are we coming back? Here. Okay? Yesterday's low. ETH low. Now I'm going to take you into statistics. I'm going as fast as I can. Apologies. I feel like I'm on a race car here. And now, grab your pen and paper. I'm going to give you a couple statistics. Past performance, not necessarily indicative of future results. You must vet everything. So let me just make sure I got my brain screwed in right here. We opened lower inside of yesterday's range. Here's some statistics. You must vet them. Past performance, not indicative of future results. Taking out the first hour's high or low, 98% probability. Taking out the ETH high or low, 97%-ish probability. Now, this to me is the key statistic. Now, statistics are suggestions. Nothing in trading is cast in stone. Taking out the previous high or low, 87% probability. Put a tattoo on your arm for that one. And then the overnight volume point of control, 80%. Previous point of control, 68%. And I think that's enough to get us rolling. Oh, and taking out both the first hour's high and low, the IB high and low is about 30%. That is called the neutral day. So, you got that? Is everybody tracking? Is that a yes? Is that a no? Is that I don't know? If you have a question, post them. I'll do my best. If you're in YouTube, I can't necessarily get back to you. There's a link down there if you want to visit Trader Lab. It's a great community. It's only for serious traders. It's about business. I understand there's a lot of chats out there, and it's a lot of fun and games. this is not the right one for that. This is about business and attempting sustainability. And I use the term attempting because that's all you can do in this business. Learn it, vet it, and then whatever. If you want to be in the business, you're going to have to do something different. I'm going to suggest we've all done the same things you do or have done. And many of us think that all we have to do is what we're doing is make it better. It's a logical idea, and I understand that. So let's take a look at this. This is the RTH Open. Now, given the condition of the market, and this is all posted in the Trader Lab chat, and there's a lot of good traders in Trader Lab, and it's not the point of being a, quote, good trader. We're all developing traders. I've just been doing this longer than most of you, 46 years. But that doesn't mean I haven't done the same things you've done or are doing. We have all. So it's a matter of development and doing the work and also trying to figure out if something doesn't work, even though it happens randomly, does it actually have an edge? The difference for me was I always had random winners and I was always trying to make it better, and that's okay to make it better, but randomness has nothing to do with edge. Everything is random in this. Edge operates in randomness, and most of us are looking for certainty because of our psychology. You look for certainty in confirmation. Is that part of your language and self-talk? That has nothing to do with the business. It has to do with psychology. Isn't that interesting? So let's take a look at this thing. Now, what do we know? Good question. What do we know? So, statistically, we are leaning towards yesterday's low. So, and the reason for that is what happened at yesterday's high. This is the first piece. And for me, this first piece, let me go a little further back here. I think I'm losing it here. Was this. If this is yesterday's high, and the ETH volume point of control, and this is called a single, or its resistance, if all this is too high, do you think with the high probability of taking out the previous high or low, which is 87%, do you think at this time that we're going to take that out, or 87% probability we're going to check this? Which one? If you understand statistics and what happened yesterday, might that give you a suggestion to take shorts primarily? And you could take long, short, sideways, and it doesn't matter. It's time frame based. For me, it was only shorts this morning. I'm giving you the primary reason for working the shorts this morning. Now, and these are all posted in Trader Lab. Now, here's the other thing. It doesn't matter. You could trade long. There's not a right or wrong. What is the right wrong in trading? Edge, and then you following your plan. That's the only thing you got in this business. Edge. And you can have an edge buying this thing. I have an edge selling this thing, and we're all good as long as we execute an edge. So this is not about a right or wrong. This is about trade plan. So now, RTH Open. Now, I'm going to show you, the first trades I took were shorts, and my teeth chatter like everybody else's. Let's take a look. This is called a variable high volume node. I made these terms up. I didn't know what to call it. And what it has to do is this yellow line. This yellow line is where the high volume is. Now let's go back to the shopping experience. High volume is a retail price. The difference here is that this every second in the market is a price discovery auction-based moment. What is this thing worth? And the question, of course, for all of us is we don't know. So it's going to auction or rotate to try to determine what's too high, what's too low, and what's fair. Now, this yellow line measures volume. So as the market opens, RTH open, there's no volume because it resets. And then as the buying or selling comes in, this starts moving around. And now we start looking at the liquidity, the order flow, and now we're putting the layering together what we know in the higher time frame, which I already showed you. Go back and take a look, see how the pieces fit. This is a vertical integration of time frames. I call them, think of them like Matryoshka dolls, those Russian dolls that are inside each other. That's how I think of it. I had to relate to it some way. So instead of trying to make this complex thing, I said, well, wait a minute, I already know how to shop. If I'm decent shopper, then maybe I can become a decent trader, because all that's happening in your store is pricing, but they don't change them. It's a slow time frame. What's happening here is real time frame. It's happening all the time. Same though. So if I understand how to shop, I might understand how to trade. Then I have to know where to trade. So this is now the new retail price. And now it shifts down. I'm going to label this. I call this a variable high volume node. So now we're in the market maybe 30 seconds here. Now I already know so far that I know yesterday might be, I'm never going to say it is, might be, yesterday's high might be too high. I already explained that. So if I know that, then I need to be thinking about the longs that are in here from yesterday and the day before. Okay? Because we never abused the longs from the day before. We came down to a structural level, and that was the low of the day. Isn't that interesting? So let's look. So now, too high. And what's this? Oh, there's one more level up here. This. Two more levels. This is yesterday's retail price. High volume. ETH high. And where'd my overnight volume point of control go? Lost that. Guys, overnight volume point of control. Let me just find it. 6710. It's right here. I'm going to just label this. So remember what happened yesterday. The high of the day was at the ETH, or overnight volume point of control. That's like your retail price from the last auction. And it was too high yesterday. So this is, and there it is. You see it? I'm going to throw a little line in here for you. Let's go back to our shopping experience. We opened below it. And the same thing we did yesterday. We opened below it. Does that mean maybe too high? And what did we do yesterday? We tested it too high. What about today? Now let's go just a little bit further. I hope. Let me just see where I am. And this is yesterday's retail price. Maybe too high. There's our ETH high. And remember, there's no precision in this. I always say horseshoes and hand grenades. If I come above this and I test the retail or high volume from yesterday, and it's like, I'm not paying that, this might have become too high. Now, the last auction is the ETH. I'm below it. Maybe now this is too high. And what else do I know? Yesterday's low, right here. Well, it was too low yesterday, and I tested it in the ETH. So, and I have over 90% probability to take out the ETH high or low. I got about an 80% probability to get to the overnight volume point of control. And I have about a 87% probability to take out yesterday's high or low. And for me, not yesterday's high at the moment. Back. You see how it all fits together? And then it's random, just to keep you on your toes. So this is called an open auction. So what that says, when you open inside of the previous day's range, not much is changed. And then the market's going to potentially be two-sided. This is very important to understand, that this is not just get on the train and go for the bullet train. Not that it couldn't do that, because it can do anything, but to anticipate behavior and narrate the market. So let's go take a look. Overnight volume point of control. Watch. Variable high volume node. Liquidity. Resistance. What do we do here? Watch. Liquidity in the book. This is resistance. This is a variable high volume node. My liquidity comes in. Now, this is aggressive, and this is not for anybody who hasn't vetted this. It's also quite reasonable for developing traders to sit out and give it time. The open is not where developing traders should trade, because it's too fast. I mean, this is like we're in here like a minute and a half. So This is not where developing traders trade. You want to let some structure set. So what do I know? That's too high, and this might be too high. There's my liquidity. Let's look at the change. This sets up the short. So what's my short? I have this, I have this, I have change, I have a trigger, I have right here is the test. This is aggressive and, of course, never a recommendation. I'm going to throw another line in here for you because what I'm doing is I'm tracking the auction. Now, I understand you look at this and you're going, throw your hands up and run out of here with your hair on fire. But what happened here? Sellers. There they are. Where's my support? Now this was a high volume area. And there's my buyers. So I got sellers, buyers, two-sided trade. This is called balance. Where's my outside edge? There. Where were my sellers? There. My buyers are here. Lovely. Two-sided. Break again. So I know now there's my liquidity. This is the change. There's my sellers. Where's my resistance? Isn't it there? What's the language? Let's talk. It was Joan Rivers says, let's talk. Too high? Developing time frame. Too high. Break low. What's above here? Stops. Change. Break low. So I got trigger, high probability statistic, yesterday's low a day. See how my brain is functioning in this? It's not a prediction. I take stops. Welcome to the club. Stops are overhead and cost of production. This is a short. Now, for me, I'm not saying it's a good trade. I'm just saying it's a trade, you know. This, yesterday's value area low, let me give you a statistic for this one. 68% probability. These are statistics. They're not predictive. Value area low, 68%. So, scale, target, and then I run air. And then whatever happens, happens. Watch. 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 Where do we come? Pick. Stops. Liquidity. Another short. Too high. So I was doing shorts. Other traders in Turtle Lab were doing long. And their trades are as good as anybody else's. Why? They have an edge. And I always say in Trader Lab, guys, when you're a developing trader, do not be a whirling dervish. As you develop, it's put a stake in the ground and stay in alignment with one side. Now, if you see this and then you don't know what it says and it can change at any moment, then you're okay. You're out. There's no big deal. You got all day. So let's watch. Come up here. Look at the liquidity. This is order flow. And where are we? There's an old saying in real estate. Location, 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 location. Short again. Back to here for a scale. And then where are we going? Looking to fall out the bottom. Trying to get where? There. Now, what I do, now I see this sweep. Now, when I see this sweep, I am, as they say, teeth chattering, because often when we get a sweep, we can see a counter rotation. Now, of course, nobody knows. So right here, I have my sweep. This is resistance for me. This is a little more order flow oriented. I'm coming here, and my exit is ahead of here. I don't put it at the low. I always want to get ahead of it. And needless to say, let's watch. See the two-sided trade? Watch. Sweep. Watch. Now, coming out here, now, by the way, over here, now I'm 2 to 3 ticks ahead of any target. And the reason is, think about this. If you're going for a statistic, and I'm not done with that statistic, I'm just going, So this one was a trade manager. I got taken out of this one. And I'm not doing any longs yet. Let's watch. I'm back across the range. On a two-sided day, I'm not trading from the inside. I'm only trading from the outside. What else do I know? Great question. What do I know? Let me show you. This is too high. And it's my retail price from yesterday. So what I'm doing is, this was too high. I was taking shorts there. If I come outside here, my next level is going to be over here. That's what I know. And of course, I don't know anything else. So for me, I'm only taking the shorts. And some of these trades are not structured trades in TraderLab, so I'm not going to talk too much about them. Other trades I take. But let's watch. Let me try to get this all on the screen. This is that buy sweep. So I'm outside, and also here, this is a high volume area in a higher time frame. Let me see if I can show it to you. Now I'm mixing time frames, and I know it gets confusing. Remember, 12 retail price, and this price is around 12. Let's see. Yeah, 12, this. So 12 is an area for me. So I come up to 12, and it's a higher time frame. So when I talk about a vertical integration, now this doesn't mean anybody needs to be doing any of this. So I have 12 as my level and this. So I know I can easily get body slammed over here, and you can just come up here. So I get the sweep. The sweep suggests downside rotation. Now, the problem naturally is from where? Part of the thrill. Now, I'm sitting here and I'm going, I'm looking for the short, okay? But I have, because I have a level right there. And as far as I know, that's it, So here, but then it blow to the upside. And then I'm going, now right here, I'm confused. When I say confused, let me clarify that. I'm going, I don't know. I'm going, Now, up here, I'm seeing the icebergs. I'm seeing the stops. And here, I see less stops. The only thing I use from indicator world is something called divergence. And for me, if I see buyers, who are the buyers? Well, initiators, right? But also stops become market orders. They show up as delta. So there's 30. All right, downside rotation going to the moon. Here's 8. Going to the moon. Don't know until hindsight. Break low. Now I have a trigger. Let's go take a look at what this thing looks like. Now, could have been here. All right, same thing. But we did not bounce off here. This is a trigger. This is the resistance. What happened here? Kept going. Held this from the other side. Going up. What about here? Volume. Break low. Held it from, kept going. Oh, wait a minute. Broke. What changed? Let me draw a little box here for you. And this is just a way to isolate these auctions. These are all auctions. Now, let's talk our shopping again. So the volume, well, this should be over a little bit. The volume is here. Just to show you. Let's look at what's going on here at the moment. I'm not paying that. Yeah, but it's on sale. Retail. So this, too high, too low. You see the sellers, the buyers going to the moon. What happens here? Sellers take control. The buyers were there. I now break under it. Now I know, in hindsight, of course, this is potentially too high. And off we go. short. See it? So I was like, my jaw hit the floor. But then I go, well, okay, I have a level. I have the behavior. I found too high, maybe. I have my high volume, this is a reversion trade. I always say in Trader Lab, reversion, guys, reversion. Understand reversion. This from here to there is mean reversion. This is the mean or the fair price. Remember the shopping thing. I'm not paying that. Retail, come back to high volume. But if we check this and it's too low and I come across the range, what was the last thing that was too high? It was right there. I can sell it here. And then my objective, since we're in two-sided trade, is to come there for the scale. See the resistance? You can learn this in Trader Lab. I'm not saying you want to learn it or should learn it. That's not my thing. What I'm saying is you can learn it. Now, too high, outside edges here. Let me draw this little. I'm going to take this off of here for now, just to clean this up for you guys. All right. I'm going to extend this, and Bookmap has promised me at some point these will extend on their own, so I don't have to do this. Let's look at the structure. What I'm showing you is auction-based structure. And when you guys think support, resistance, and all this good stuff, well, I'm kind of doing the same thing, but I'm doing it differently. Too high. I'm not paying that. Remember? Where's the retail volume or high volume? This is too high. 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 And what we're trying to do is come back here. And where are we trying to go? Back there and then there. It's still mean reversion. Underline the word mean. Target. These are all Trader Lab trades. You can learn these. And what was that statistic we're trying to get to? Wasn't it yesterday's low, right? You had it there. Yeah, so that was a target coming down. Then you have ETH higher low, right? Here. Now, there's another trade, and it happened actually here. I got to tell you about this one. This is called the IBF, and I posted this in Trader Lab. IBF is called IB failure. IB failure means that when you come outside one, remember, there's a 98% probability we take out either the first hour's high or low, and we were going for this because of statistics and this, So this was all on the hit parade. When you come back inside, and this happens at 9:30 Central Time, the first hour's low, which is there, which is from the last time we were down here, wherever that was, here, you see, and then we came across. If we come outside, then the potential is, if we're in two-sided trade, we got our high probability targets, and, the market can do anything. So, this is a long. And it's a mean reversion trade. Now you're saying, well, wait a minute, Tom, you're doing mean reversion, you're selling. Why would you get long? Because we tested, took out the weak longs that are still in here, hit our statistical probabilities. And if you've noticed, the market's rotational. It's two-sided trade. So until it changes, it's only, for me, outside in trading, not inside out. And one of the problems for us as traders is alignment with the condition of the market. And now, the thrill, of course, is that how do we recognize that? Well, you can recognize that if you actually define it. It's called conditions. So when I built trading systems, they were conditionally based. If this, then that. If not, then what? So if it doesn't do something, what's going on? If it's doing something until it changes, it hasn't. So when it comes across here, this is a long, and I posted this in Trader Lab. The idea of this trade is to come here and come across the range. So let's see what it does. This is posted in Trader Lab. And the idea is to come here. Why? Target. And stops. And we come out, we pick right here, and it sets up a short IBF back to there. So you have the long scale to there, the short, only 30% probability we take out both. But we're in balance. And we have what? Potential government shutdown. Is anybody going to really jump in here and take a large position? Yeah. And what did we do yesterday? Found too high. What have we done so far today? Found too high. Oh, by the way, if we get past this area up here might be the next area to go. Let me show you why. And then we're going to be caught up because this is rotational trading. You can trade rotational trading if you have a plan for it. If you don't have a plan, it's going to be painful. This is yesterday's retail price, okay? This is what we're leaning on for these shorts. So, this thing, right? If we push through here, this is the outside of this behavior. There's going to be stop. There's a little ledge there, it's called. There's going to be stops up here. So what do we know? Too high? What do we know down here? Too low. What else do we know? Two sides. So if I get through here, I got this. The reason I was shooting for this low is because this is too high and this is too high. So I got resistance here and sell stops under here. So that's the logic. Now, what happens? Isn't that interesting? Let's see what else we got here. I think there you are. See the structure? Let me move this out for you. It's two-sided trade. So this is called mean reversion. Now, it will potentially move out of this. Is that a problem? No. It's random, so it's not a problem. It's just what it is. So, too high, too high, too high, retail, rotational trade. So if you have a plan for this, and you have to have the range. Now, if you can't trade this range, I'm not saying you should. And what do I know here? Variable high volume node. Let me show you this. This is the retail price. Now it's bumping around because we're rotational. So it's like too high, retail. If I come up here and it's too high and I have a trigger, I can sell this to there and then back out here to there. Right there. That's it. Do you want to trade this? I don't know. Me? I kind of go for the range because my stops are pretty consistent. Let me show you the order flow here too. I want you to see how you can integrate an understanding of market mechanics, not predictive, just maybe it'll do this, maybe it'll do that, and where might it do it? Now, order flow, you see the book, you see the icebergs, you see the buyer, and you see what? Nothing. So this, now I cannot enter here. My entry would be like in here. This is only the range I have. So I'm going to tell you right now, when I'm looking at this, mentally, I'm narrating. I'm always narrating. I'm always going, if this, then that. If this is too high, how does the market work? You don't know how the market works and letting your indicators tell you what's going on here. I think you're at a disadvantage. Just an opinion. This is where the market might go. We have a sweep. What does that say? Market might rotate up. We have a buy sweep. Market might rotate down. We're in balance. It says outside in, outside in. We already got our statistical probability. So now what? I don't know. What do you think? I don't know. Too high, right? Maybe too low. Two-sided trade. Now, let's come back to another concept. If we found too high yesterday, and now we have more shorts in the market, we can still come across and squeeze these guys out. Basically, what's going on here, you get your buyers here, retail trader stops are under here. What happens to them? Thanks for playing. You get a coupon to the buffet. Sell sweep suggests rotation up. Buy sweep suggests rotation down. Sell sweep suggests rotation up. Buy sweep suggests rotation down. By the way, it's not anything more than a suggestion. There's more to it. Liquidity is here. This suggests nothing except this. So now, subject to your plan, you're back in your Barca lounger and you're waiting for something that gives with an edge. And you have no trade unless you're a gambler. And then again, maybe you can trade this. I can't. Not profitably. I can trade it. And all I'm doing is my brokerage getting excited. That's about it. How are we doing? How you guys doing in YouTube? Please give a like if you're getting something out of this. Gives me encouragement to keep doing this. There's no cost. Trader Lab's open to everyone. And you can access that with using the link in the bottom of YouTube. So I have nothing to do now. I'm just sitting here and working on my crochet. I don't have an edge. I don't trade. I'm not here to keep busy. This is not a video game. This is business. That's what Trader Lab is built on, business. 1 second, please. I am back. You guys have questions? Post them. I can take a look right now since I'm back in the Barca lounger and waiting for the market to do its thing. So this is the way the market works. It's not predictive. What we know is what creates behavior. It's participant behavior. The other part of it is the market rotates. And using a high tier order flow tool like Bookmap, we can actually see certain behaviors that are not revealed with your standard plug and play indicators, which is what most retail traders think this is. Most retail traders, because depending on the generation you were born in, you grew up on video games. So you're going to bring that here. And you're going to think this is just another video game. Not. Very different. The rotations make it look like a video game, but it's not a video game. It's a business. It's a business of edge, not a video game. So a lot of you guys come in here and you're used to that adrenaline and the dopamine. You know what I mean? You shoot something and you get a little score, fine. This is not that. But you've kind of grown up on that. You're bringing that. And when you bring it, you're already wired subliminally or unconsciously for that behavior. I think that has actually set you up for much deeper conflict with this versus the stimulus that you're going to get from these rotations. You don't know where to interact. You're playing your video game. And the fantasy is play video game, get a check. Online gambling, right? Well, gambling is gambling. And you will have winning trades, no doubt. We all do. That's the problem. You're going to say, Tom, how can it be a problem? Yeah, it's a problem because you're getting reinforcement with no edge. Where's our outside edge out here? Not a recommendation, right? Cross here. This is the next area. All these are on the hip parade. So what I do is I just put my levels on here and then I narrate the behavior. Remember what this thing does. The market goes up to go down. The market goes down to go up. Market goes up to go down. Market goes down to go up. Market goes up to a resistance to go down to go up. Market goes up to go down, goes yesterday's low, goes down to go up. And if this is the current high, then squeeze. Where's our next level? In here. This is called a ledge. This thing right here, where you see these, this 16 area. So there's fuel up at 16. And then we got 18. So this area, that's why I highlighted this. And guys, whether you're in Trader Lab or just sitting out there in the ozone, if you don't understand why this happened and what it means, and you're just letting your spaghetti do the walking and the talking, it has no idea about this. And the other part of it is, it can't tell you what it means. I know what it means. If you're in Trader Lab, you can learn what it means. Now, it's not predictive, but if I clear this, which is, this is next. No. So I'm getting a sweep. We're here right now in the real time. Now we have to see. Remember where our levels are. I'm showing you how all this is put together, and this is now the sweep here, and there's that outside edge. If I get through here, I'm then observing, not a trade recommendation. I'm observing the locations. Do you think having a market understanding, not predictive, let's get over this I'm going to be right thing and I know what's going to happen. One thing about trading, ego has no room in this. Anytime I see traders pounding their chests about how smart they are, they actually have a deficiency and they don't understand it. They need approval. This is not where you get approval. This is where you have a trade plan and you're aligned with your plan. And if you follow your plan, that's where your approval comes from. Not the random outcome or distribution of winning and losing trades. We all have them. The plan is what delivers the net. You're in a random environment, so are the casinos. This is my level. Now we're going to see. Now, the fact is here isn't like you don't automatically come in here and sell this thing. You come in here and you observe it. So we're going to observe it together. I'm getting my sweeps. That's a suggestion of counter rotation right here. Let's watch it. Not a trade recommendation. Don't you dare. Outside edge. High volume structure. Location, location. Not a recommendation. Everybody takes a stop. I'm not saying anything other than let's watch this. I don't know. Do you? Guys, these are not trade recommendations. I don't want you taking my stops. I take them. Everybody does. It's overhead and cost of production. This is not the business of being right. It's not what this business is. You can cheer for the team. That's what I do. You know, you talk to your monitor, like, come on, you know. But, you know. So, get below here, get below here. What are we trying to do here? Well, not a recommendation. So in this scenario, what we're trying to do is, number one, get risk neutral, which means pay to stop on your runner. The primary idea of this trade is to come there. We'll see. Not a recommendation. Guys, can you see the rationale of this short? And these are not recommendations, guys. This is the Trader Lab. If you're interested in what you're seeing me do here, and you know I don't like to call trades, I take stops. Why take my stop? But here's what's important about what I'm sharing today. Long before this got here, and if you're in Trader Lab, this is all posted. This was an outside edge. And let's come back. How you might know this, because it's there. And what was this? It's a ledge. And a ledge, this is not finished. So it could come up in here. Okay? So this is the short. And where are we trying to go? Well, if we get under this, then the current developing volume point of control, which is there. This is called mean reversion. I know I'm probably sound like a broken record. The primary trade, in my opinion, that every developing trader needs to understand is what's called mean reversion. When we come back here on this trigger, that's the mean is right in here. We reverted, and that gives you the rotation. If I can get inside this, under here, this outside edge, I can then come here. That's the reversion. So in microstructure, this is reversion. So you understand, I'm not paying that. Yeah, watch. The trigger. Right here. Break. The entry is here. And what do we know? Remember, sweep, alert, location, down, and then helmet. That's it. That's as deep as this is. And random. Do you guys who are visiting in YouTube, do you think you could learn this? Well, better question is, do you think you might want to? And I'm going to suggest right now, if you aren't willing to take what you believe that might be defective in this business and open your mind and let go of your comfort with the random winning trades but not having an edge, this is going to require you to pry loose the things you've been doing maybe for years. That's what happened to me. I'm going to tell you, now when I started, it was 1980, so I didn't have any information. You guys have the other problem. Anybody can slap something on the internet, tell you they're an expert, quote, influencer, a creator. Anybody can have a chat, and it's, if you cruise around, there's more snake oil, and snake oil's been around since snakes. How do you differentiate, right? Well, you got to vet. You got to do your homework. And you need to be open-minded, but you got to be cautious. So you can't take anybody's word for anything, and certainly not mine. But what you can do is come to Trader Lab, use the link in the bottom of YouTube because there's no cost, and then you can kind of put your toe in the water and hang out. Say, what's going on here? Is this nonsense? Or is there something to it? Why might there be something to this? How can I be here and say this is what I will do? And if such and such happens, I can't tell you what will happen because none of us have that. Casinos can't tell you that. And a casino is our successful, proven business model. And we lay out structured trades that have an edge, even though we're going to pay the gamblers, same as the casinos. Does that give us an advantage over other traders who are just throwing the spaghetti against the wall? Up to you to find out. And this is not for everybody because you're going to have to change what you believe to be true. That's not easy. It was hard for me. I thought I could just keep my indicators. I was so familiar with them, and I'd spent so many years with them, creating my own, building systems, So I thought, well, I just got to, make this better, All that walk forward testing, data mining. I mean, years and years and years. And the winners, tons of winners, but no edge. So the re-optimization on the walk forward testing was actually attempt to fix a defective process. So when you're curve fitting, tweaking, tuning, looking back and making it wonderful, all you're doing, you're not here now. The thing that the here now is what's happening now, what happened this morning, what happened yesterday, and what happened in the ETH, and then what's happening in the higher time frame, which is a week high. So in the meantime, what are we doing here? Maybe. See? Is anyone who's visiting in YouTube or who's even new in the Trader Lab, do you think you can't learn this? Neal, candles, I don't use candles. Candles for me are just price. I mean, price. The thing with the candle, and now when I started, there were no candles. It was bars, open, high, low, close. But I mean, candle's a wonderful thing, right? What is it though? It's price. But what tells you what happened inside that candle? You can't see that unless you have an order flow tool. See? You know, if I put, and I don't even know how to turn a candle on here. You could see candles in Bookmap. I have no idea. But if, now here, where does this trade fail? Well, the trade would be risk neutral. That means the worst that happens is if it takes this out, the trade scratches. You know? Where's my resistance? It's here now, in this out here, you know, right in here, this volume. So right in here, if we pick, I call it a stop pick. Stops are going to be here because that's retail trader behavior. Write this down. Think like a retail trader. Don't act like one. Our outside edge, you notice how the volume tapered off up here? We ran out of buyers. So unless I get buyers up in here, all I'm doing is rotating into the stops that are here. And now you see the liquidity. If I pick those buy stops off and I can't get above here, this is an inventory grab is what I call it. And now this, let's see. Write this down, guys. Think like a retail trader. Don't act like one. I built trading systems based on retail trader behavior, and I built them to trade into stops because I kept trying to, you know, we don't want to get stopped out, of course. Well, after a while, the light bulb went off, and I said, you know, maybe instead of putting my stop with everybody else, I should actually trade into those stops because that's what everybody else is doing. So it helped me understand why the market would come here and that I could potentially sell this. Now, this isn't a recommendation. Remember my shorts over here, but that's besides the point because you're still attempting to come back here. And you got your mid and your VWAP is someplace around here. There. So the possibility is, unless we take out this high, to come to mid, VWAP, and VPOC. This is a reversion trade. That's it. It's not more complicated than that. And yes, it's random and you're going to take stops just like me. Don't want to take a stop? Wrong business. Don't want to pay overhead and costs of production? You can't be in business. Do I sound insensitive? Yeah, at this point, yes. Why? I tried to squeeze the risk out. I didn't want to pay those stops. Okay. How do we get to extract edge? We got to pay. We have to be willing to pay because it's about sampling. We're sampling the market with an edge, but the outcome of any individual trade is random. So, and you can have strings of winners and strings of losses. That's what this statistical probability thing is. And most of us are all focused on winners. And this is not a business of winning. This is a business of edge. So when you come into this, you open the door to the casino. You need to take your brain and turn off certain parts of it. Your ego, your need to be right. The need is to follow your plan. When you follow your plan, even if you have a losing day, I have losing days. No big deal. I can hit my loss limit. Don't like it. What am I going to like about that? No big deal. Here's why. I have an edge, but my edge and the condition of the market are not always in alignment. And I don't have the ability to know until hindsight. So when I'm operating my edge, I also know that I can have strings I can be out of alignment, but I won't know it. So I'll be putting the trades on and I'll take a stop and I'll say that something changed. Well, maybe my location was off. I put the trade on again and I get hit again and I'm going, well, okay. Am I doing what I'm supposed to do? Yes. Well, okay. This is still a short, not a recommendation. Watch the liquidity. Where are we trying to go? Here, and it's not a rec. Remember, this is my outside edge. It can easily get through here and just, come here or whatever. I don't know. Do you? Don't know. So this trade is out here to scale and then hang out. Helmet. Risk is out to here. That's it. We can hang out here now, work on our crochet, or get back in your Barca lounger and just hang out and watch this. That's all there is. Hope you're getting something from this. Guys, this is the Trader Lab. So yeah, about candles, no, I don't use them. I don't use them because that's what most retail traders do. I'm not saying you can't use a candle, but there is no such word as verify in trading. There is no, it is this, it is maybe. Write that down. The best you have in this is maybe. It's no different than the casinos. What do they have? Well, maybe this, maybe that. Maybe the cards coming out of the deck will, and the way the gamblers play this hand will favor the odds, and the casino will get its edge, or maybe the gamblers get paid in the casino, maybe, So the best you have is maybe on any individual trade. And the only time you should trade, in my opinion, is when everything is lined up and the trade you've already vetted that has an edge shows up. And then you'll take a stop, or you'll get a scale and scratch, or it'll get the target. And you just sit here as curious as I am about this potential short. It's not a recommendation, but you're going to get to see what happens. Now, it might take, who knows how long it'll take. And all that can happen here is a full stop, a scale and a scratch, or a scale and the next target there. And if we rotate down, let's think about what we can anticipate. Here's another saying, little sayings. You got to anticipate to participate. So what did we anticipate? So we could participate. Write that down. You have to anticipate to participate, not predict. There is no such thing. There is no confirmation. It doesn't exist. So we have to let go of our primal needs to avoid risk. We want to avoid risk. So we look for certainty. We look for confirmation. What happens if you're in a business where it doesn't exist and you can't get it? So that's what I was talking about, beliefs. The primal wiring, avoid risk, the apex predator. Your primal wiring cannot differentiate between the risk here and the saber-toothed tiger behind a rock. It responds the same. So to fulfill the need of certainty, you go on the quest for certainty in an environment where there is no certainty. So and I have mentioned this, and I just want you conceptually to think about these things, because this is the broad issues that all developing retail traders face. And I would say, with the failure rate as high as it is, traders are trying to bend this into fitting their psychological needs, not bending themselves into adjusting to the business. Those are two separate things. I spent years trying to create certainty and squeeze the risk out. That's my primal wiring at work. So I was never conscious of the choices I was making. It was natural. It was, quote, logical. The logic was built on primal needs, not the business. Does that make sense? Well, sweet heat, you shouldn't be trading a short or a long or anything unless it's vetted. This trade can blow up like any other trade. Why not? And here's the way, for me, this trade's a winning trade. Doesn't matter what happens now. It's a winning trade for me. Even if it's a losing trade, it's a winning trade. You're going to go, wait, how can that be? Because it's not the outcome of this trade. It's the outcome of all the trades that I have vetted in this specific condition. The stop is a winner for me because I followed my plan. It just wasn't part of the distribution at this time in this market. Now, I don't emotionally, of course, I feel disappointed. Hear the word? Feel disappointed. But from a business point of view, that's my job. And whatever it does, it does. I have no control over what the participants do. The casinos have no control over the cards coming out of the deck or how gamblers play the cards. It's completely random. The only control casinos have is the game, right? So I only have control over the game. This is my game, and I don't know anything else. So that's it. So whether I get scaled, which is part of my plan, or take a stop, or scratch, or whatever it does, that's my job. That's a winner for me. Not necessarily in the P&L, but over time, it shows up in the P&L. That's what makes it a winning trade, in spite of the specific outcome of this one trade. Does that sound like double talk to you? Or is it more philosophy and understanding the business you're in? You see, how can you feel okay taking a stop? I have to, or else I can't be in the business. So I have to accept it. So if I'm going to put risk on, I'm not going to do it where I'm gambling. I'm going to do it where I have edge. That's it. So this is not a video game. If it was a video game, we'd all be playing the game, and they wouldn't have enough ATMs to move in your basement, right? So it's not a video game. It is a business of statistical probabilities. And the work part of this, the things we don't like doing is actually figuring out where your trade is and where it's not, and to just sit and be patient. So I suggest everybody review this stream today, because what you saw today was how a trade plan comes together and what the pieces are. Now, I cannot spend time on how you actually extract an edge, but there was tons of material posted over this weekend, and thanks traders who shared their resources, books, and other ideas on extracting an edge. You need to understand what edge is all about, and the business model is gaming. So if you've ever gone to a casino, you kind of know what's going on in there. Guess what? This is a casino. And I prefer to sit on the house side of the table versus sitting with the gamblers. That's me. That was a choice. You can make that choice. And then you got to roll your sleeves up and potentially change your beliefs. And that's the hardest part of this. Well, there's two parts that are hard. Change your beliefs and manage your emotional stimulus, your fear. FOMO, fight, flight, and the rest of it. It's all very difficult for mere humans. That's another reason I built trading systems. I wanted to remove my fear, and because everything is when it happens. When you're putting a trade on here, if you did, your teeth are chattering. You're 100% uncertain. There's fear at its maximum. The lunatic under the hood, which I call Hyde, your primal wiring is saying, oh, no, 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 no. Be sure, be sure, be sure. Hardest time is right here. But that's where the edge is. And that's where the fear must be managed, because the risk is the lowest when you perceive the risk to be the greatest. Does all this make some sense? And can you see why? Now this might take forever and it may never get there. That's not the point. Let's watch. What do we have? Liquidity. These are algos. You see the bracketing, neither here nor there. They're in their own little world. We're all swimming in the ocean, guys. And we have there's all different types of participants in the ocean. And I will tell you, we are kind of like the fleas on the butt of an elephant. We are the small players. And we're at the low end of the financial food chain in this business. We are primarily trading against other retail traders. We need not to do what they do. There's over a 90% failure rate. And chances are, if you don't have a sustainable process, in spite of, random winning trades, which everybody has, you're on your way out because you're doing what the 90% do. What I found is I took what the 90% did and what I did, and I reverse engineered it. And I was fortunate to learn market profile back in the mid-1980s from Peter Stottlemyre, who actually created it at CBOT. The other problem is I still had indicators. So I put them together, and that cost me another couple of years. So, you got to learn and find your way. The difference is you guys have more information than you can ever get through. I had no information, so I had to make it up along the way. So there was nothing. So my problem was no information. Your problem, too much information. Both are the same in some ways. So whatever happens, happens, right? Whatever happens in Vegas stays in Vegas. If this thing makes a new high, this trade would scratch. I'd be okay with that. And I would not necessarily be done with the short, because my outside edge, where? Here. Where's the high of the day? Here. If it makes a new high, then it's going to be, But until it does, the trade is not over. So we'll see. Let's go to micro. What is this? Too high, too low, too high, too low. Retail. Fractal, if you will, or small time frame. Now, I can come out here, come back here. Going up in time frame. If this outside edge is too high, I can go up to the next higher time frame, which is this one, and come there. So I'm trading multiple time frames. I could slice this thing up any way I want to operate in it. So what do I know? Let's talk about what we know. There's a lot we don't know, like everything. We know there was a sweep. We know this is too high. We know this is a sell trigger. We know this is a location. We know that this is too high, so that's an outside edge, location, location, think real estate. We know that we're now in this little distribution in the microstructure, shorter time frame, and that's the retail price in this little auction. Too high, too low, retail. If I can break away from this, I can move outside and eventually maybe get here or not. So that's my trade. I'm sticking to it. And whatever happens, I'm clueless, but not ignorant. What do I know? I got my sellers here, and that's too high. What else do I know? If I can get below here, this outside edge, I can move to the next location. Where were my buyers? They're here. This is too low. What might I come back? Right here. There, and maybe around to the other side. I don't know. Do you? Do I need to know? No. Can I know? No. So why am I putting my energy into knowing what I can't know? I can't. What do I know? Balance. What else do I know? Mean reversion. How do you trade mean reversion? Outside in. Where's the outside? There. Is it going to go higher? No idea. Is that my job? Nope. What's my job? Take the trades, wear a helmet, be thankful, move on. Next trade. Mean reversion. Underline the word mean. We joke about that in Trader Lab. What's hard about this, and everything is hard, is uncertainty. Right? Isn't that the hardest part of this? What are the top of the food chain doing, JC? I think they're in their Barca loungers. The higher time frame participants, you see these guys in here, the icebergs, but they're just, the higher time frame. I think they're all out in the Hamptons having a barbecue. They act. Well, I really can't speak for anything other than what I do, right? But you'll know when the higher time frame is in here because that's when you'll get these outsized rotations, and you'll see 4,000 icebergs going off and stuff like that. At a crack. So you'll see different behavior. And where are we going with this? Here. So this is just a trade. It's not a big deal, and the range is palatable. See this. If I wasn't streaming. This is my trade. I shared this in Trader Lab, and it's in these 60 PDFs. And I'm not saying that this is any good. I'm just saying this is something. I did these many years ago, and it was only ideas. They're not plug and play. I have to stress that. But if you come to Trader Lab, you'll be with a group of like-minded traders. It's serious business. This is about sustainability. You want to build a business, or you just want to have a good time. It's still work. You still got to do the work. A lot of this was research also. This is from 2020, and it's only because people were saying, what are you doing? I started just throwing some posts around, this to this, and this is the same. Some of this is the same behavior. Obviously I have other trades. I try to keep this simple, and a lot of this was research. I was working with Bookmap developers on ideas. I have to tell you, when it comes to research, about 98% of it goes in the round file, just the way it is. I'm also a researcher. I spent a ton of years reverse engineering, behaviors and building my own indicators. I built indicators, hybrid indicators. I shared an office with George Lane, who created stochastics. So I thought, oscillators were the holy grail. I actually did. Oh, look at that. It crossed over and the market went up. Yeah, sometimes. Or now you guys have RSIs, MACDs, all that kind of stuff. It's all the same. It's all derivative. And they all work at times, right? This is the thing about indicators. They all work randomly. That's why you can have winning trades, and then you create a belief in a process that doesn't have an edge. And I'm not saying you don't have an edge, but if you can't say you do have an edge and demonstrate to yourself or me, if you're on a trade desk with me, I'm going to say, show me how you got your edge. Where is it? What is it? What are the conditions where that trade is qualified? When is it not qualified? Why would you only be trading rotations today outside in instead of directionally? Would you be able to answer the question? Or would you say, I do trade directionally today. I want to trade, quote, with the trend. And I'm going to say, what is the trend? And then you're going to say, well, higher time frame, it's up. I'm going to say, yes, it is. Are we trading the higher time frame? No, we're not. We're day traders. We are trading the developing time frame overlaid in multiple time frames, vertical integration. Years ago, I used to think of this like a chess game taking place vertically. So it would be like multiple chess boards, going up. Well, I think the better way to think of it is Matryoshka dolls, because they're happening inside of each other. What's happening in here is what's happening in here. It's all the same. So if we can understand the mechanisms, we can then use tools that are designed to give us edge. Order flow can give you edge. Also, trading is not mechanical, so it's a business of alignment. So whenever someone says, well, how do you trade? How do you answer that question? I'm going to say you trade in alignment with the condition. The other part of it is the condition changes. So we're operating, it's kind of like, imagine in a trending configuration, you're on the Autobahn, it's pedal to the metal, and all you're doing is going one side, and you're looking for whatever kind of counter rotation to get aligned with the directional move, higher time frame are involved. In this configuration, it is rotational. So in a rotational configuration, you're not trading the same way you do in a directional market. Most retail traders think it's plug and play. You do one thing all the time, and then you curve fit for a specific condition. The problems I had when I was building trading systems was the system was always behind. And there was no day trading. I'm talking about swing trading and position, trend following. So even then, a trend, which is just a different time frame, can be rotational. So if you're being rotational, then you're kind of buying too high. You see what I mean? Like the market's already made a move to get the system to switch. So it was always behind. And many retail traders, no matter what time frame you're in, you're behind the 8 ball. Because if you think this is a trend, it's not. It's rotational. So in the trader lab, if you have an edge and you've done your work, you're only taking rotational trades, which are reversion trades. Or you're in a different time frame, and this could be your trend. This could be your trend. For me, it's not. For me, it's an opportunity to come back here. And where's the stops? Under here. What about the guys in here? What did we really do here? Didn't we squeeze out 704 buy stops? Who are the buyers? The stops. If I don't get buyers above the stops, and look at 1,000 icebergs here, I'm going to say, warning Will Robinson moment. Short. You see why? Now, what about the longs in here? Where's their stops? Aren't they here? And if I take a short here, where might I come back in a reversion balanced environment? Here. And where's the stops for the buyers in here? Same place the stops were for the shorts out here, out there. This is trading the auction, and this is something you can learn. And it is not plug and play. Sorry, wish it was. You're not going to get an ATM in the basement. What you're going to do is you're going to be challenged to change what you believe the business is, and you're going to have to let go of the things that are so hard to let go. Well, at least it was for me. Everyone who comes to Trader Lab is there for one reason. That's because they want to improve their game. And even if they have random winners and they're somewhat profitable, they can do much better if they actually isolate behaviors and then only trade the behavior until it changes. Once you define the behavior, the conditions, then the trades that are qualified are only outside in here. Again, I'm only talking about me. I'm not saying for you, you wouldn't be trading the bullet train. This might be your trend. For me, it's an opportunity to come here. For you, it might just be this. See? And there's not a right or wrong. What is right for you? You got to figure that out, because this has to psychologically align with your, comfort. Comfort is derived from tangible statistics. When you don't have statistics, all you have is emotional triggers: fight, flight, revenge trading, fear, all that, FOMO. So if you don't know the condition of the market, you might be buying this, buying this, buying this. Well, for me, I'm selling this, selling this, selling this. You might be buying it. Is it aligned with the condition? Can you define the condition? And it doesn't mean this isn't the low of the swing and we're going to go and take out the high of the day. That is not what this is about. This is about understanding how the market works, why it does what it does, only interacting where you have a vetted edge, and accepting the random distribution of outcomes, not being controlled by your fear and your emotions because you don't have a plan. If you don't have a statistic that you can touch, which makes it tangible, then all you have is the intangible. Emotional triggers are intangible. They're not based on anything but your primal wiring. It's built in. You can't stop it. The statistic gives you something to look at so you can acknowledge the stimulus, the emotional trigger. I feel the fear anytime I put a trade on. I also ignore it because I understand what it's there for. It's trying to protect me. And for years, I thought it was willpower. I will not bail out. I will not move my stop to break even when I shouldn't. I will not pick the high of the day, right? All those things we all do. And I'd still do it. Or it can't go any lower. All that jazz. Ugh, come on. We've all walked in the same shoes. The question becomes, can you learn from your experience and not keep repeating it? You have something I call trapped equity. What's trapped is you've been going to school in the market and you've been repeating the class. That's called Trader Groundhog Day. When you wake up with the same result, no matter how hard you work. I did a webinar actually on it, Trader Groundhog Day. In fact, I want to show you, if I can, the Trader Lab, what it looks like. And it's open to everyone, and you can use that link in the bottom of YouTube. And I want to thank all Trader Lab participants who make this a very special community. Look at all of this. Posting. A lot of charts, a lot of mutual support, a lot of time on psychology. There's our target. Is that a trade that might work for you? And again, I take stops. I don't think there's any way out of the pain, right? The frustration. And where's the stops? Weren't they below there? So this is Trader Lab. There's tons going on in here. There's also a library of webinars and a document section. Ned, thanks for curating this. Start with the primer webinar. It's got over 33,000 views. Is there a holy grail? Is there? How close can you get? No, there's no holy grail. Trading multiple time frames. How do you get aligned with these pieces? Trapped in Trader Groundhog Day. Bookmap order flow and volume profile wins. How do you integrate these pieces? And a document section. You can use the link in the bottom of YouTube if you're inclined. There's no cost. You won't be abused, solicited, and you'll have access to all the additional education, stocks, options, crypto, order flow with a high-tier tool like Bookmap, and much more. Remember, stops are here, 211 stops. Oop, just had a power surge. Hope I'm still with you guys. Please give a like on the way out. Appreciate you visiting the lab today. And I look forward to seeing you tomorrow. Have a great day, everybody. Don't forget to like, support the channel, subscribe to it. And thank you so much for visiting the Trader Lab. Look forward to seeing you tomorrow. And if you're interested in building out a trade plan and creating a business model that might help you on your journey, use the link down there in YouTube. Visit the Trader Lab. Take care, everybody. Thanks again. Appreciate your time and interest.